The reason for us putting this together because I had a lot of friends and colleagues during the pandemic who didn't have their business together when it came time to get a loan for PPP. Like, we start businesses, maybe have a DBA, create an LLC, but we don't have QuickBooks set up. We're not doing any type of accounting. We're not filing our taxes on time. We're writing everything off, so we're not making any money, so we're not a fundable business. So the reason for us to put this together is to make sure that at the end of 4 weeks when y'all leave here, you have a fundable business. You're ready to go out there, get a business line of credit, a loan, and you know more about your finances. As minorities, we want to make sure that we dive into our finances. I don't know about y'all, but I've been out a couple of times. I just swipe, and I don't want to look at my account for 2 weeks. Raise your hand if that's been you before. Exactly. We can't do that. We got to check that account on Monday, okay? So hopefully today, which I know our illustrious panelists are going to help you guys get more information. So I'm going to get out the way so I can learn as well, and I'll bring up our moderator and our speakers, which we have Tristan Page Wilson. She's a Community Development Officer at Frost Bank. We have Miss Elle Hall-Coleman, who I met at the Black Excellence Night. She's of the Girlfriend's Budget. And we have Mr. Adam Wayne, who's a CPA, who will definitely be helping you with your business. So if y'all want to give a quick round of applause for our panelists and our speakers today.
Welcome, welcome, welcome. How is everyone? Good. It's a lot of women in the building. I love seeing so many lady entrepreneurs. So shout out to y'all. My name is Tristan Page Wilson. I am the Regional Community Development Officer for Frost Bank. I had the pleasure to partner with COSIGN last year and again this year to do relationships with money. I'm moderating today with two phenomenal panelists. So super excited to be here and to be a part of this opportunity to bring financial education to our community specifically, and to just continue to serve the entrepreneurship community. I will start with a few bios, and then we'll just dive right in with introductions, if that's okay with you guys. So we have Elle Hall-Coleman, Girlfriend's Budget. Elle Hall-Coleman is the founder and CEO of Girlfriend's Budget, LLC. She is also a personal finance and business coach who helps women from all walks of life enhance their confidence and cash flow. I like that. With simple money management, mindset, and business strategy. She has been featured on Good Morning Texas, Voyage Dallas, voted best in DFW, and named top 20 women financial blogs on the web, and is passionate about helping women budget their way to living a more abundant life. Thank you for being here today.
Thank you. Thank you for having me.
And then Adam, we got to chat a little bit earlier today. Adam has a long bio, so I'm gonna pass it to you in a second. But a little bit about Adam. Adam is a speaker and accounting professional with over 20 years of accounting experience, ranging from financial reporting, internal controls, and consulting. He started New Way Financial Management in 2019, providing accounting, advisory, and tax services to small business owners. And then in 2022, purchased a franchise supporting strategies. Adam focuses on providing the financial support that entrepreneurs need to grow their businesses and service their clients through cash flow management, tax planning, and profit planning. I feel like we're gonna be talking a lot about cash flow because I heard that twice in both of y'all's bios. So we'll jump right in. I guess if you wanna start, Elle, with telling us a little bit about yourself, maybe how you became a financial coach, and maybe what is the biggest mistake you see business owners make with their budget?
So good evening, everyone. I'm so happy to be here. It's so nice to see all your beautiful faces, all this melanin glowing up in here. I love to see that. So again, I'm Elle Hall-Coleman. I'm the founder of Girlfriend's Budget. How I got into this was really like a lifelong thing. My parents were heavily into money management. My dad was a banker. My mom was an accountant. So budgeting was talked about a lot in my household. Mostly that's not in the budget. Stop asking. That kind of thing. So when I got to college, I recognized that my peers around me didn't necessarily grow up with the same information that I did, and I was a little bit naive in knowing that. I bought my first house when I was 23, so when I bought my house, I started hosting workshops at my home, inviting individuals over to do a money management presentation because I wanted to teach the people around me how to best manage their funds. Then I became a business owner full-time in 2018, and I recognized that that's a whole different beast, managing your business finances versus managing your personal finances. So the biggest mistake that I see with business owners is they mix their personal and business finances all up together. It's Can anybody relate to that? Yes. Yeah. So we're moving money maybe back and forth in between accounts or having the same account for everything. Things get very confusing. So, like what was said earlier, when you try to go to the bank and you want to get a loan, then you have no idea what money's coming in, what money's going out. So that's when I was like, okay, we need to couple personal finances with business finances, because when you're a business owner, you definitely have to understand both. So that's where I started.
Fantastic. Well, thank you for that. We're so glad you're here. I feel like you're going to have a wealth of knowledge to share with us. Adam, same to you. If you'll tell us just a little bit about yourself, because you're both a business owner, CPA, you've been in the industry for a very long time, and then maybe what is the biggest mistake you see business owners make when it comes to their taxes?
All right. Well, happy to be with y'all. Thank you guys for, KG for inviting me out to speak with you guys. Yeah, I've been doing accounting for a long time. Actually, knew I wanted to go this route in junior high. I always had a love for numbers, but fell in love with business in college. But accounting has always been excited me because the language of business, right? Everybody's all excited about sales and everything else, right? But they always forget about the more important thing, the accounting. Boring to y'all? I love it though. It's just it kind of helps me understand what's going on. It tells a story, right? People tell you your bank account tells a story, your financial statements tell a story too, right? And that's what bankers look for, and everybody else. So for me, I love numbers. I bought a small business, e-commerce business back in 2015. But I was working at the same time and got kind of busy. But the financial part is always what kind of interests me in business, right? So I let that go. It got a little too crazy. So I started doing accounting because, once you're CPA, family and friends always want you to do accounting, their taxes for them, everything else. So around COVID, I started my business in 2019, kind of helping out family and friends. But then around COVID, I started helping out small businesses owners like yourselves, right? Because I realized when the economy has a hiccup, right, or a sneeze, we had the flu, right? A lot of minority businesses were going out of business. They didn't have cash or capital to kind of help them keep going. And I knew there's solutions out there. And I want to provide them solutions so when tough times come, they can survive, right? If I could tell a quick story, I had one client recently who just had a kid, and we knew she was going to get, she was pregnant. It's all right, let's come with a plan for how you're going to survive pregnancy and still come back to have a business that's still waiting for you when you get back, right? So we came with a plan on how to set aside some money for profitability, right? Put a little money aside every month. And so when she took off, she was able to kind of pay all of her business expenses, cover her house, and then come back to having the business when she got back, right, after 12 weeks. So that's the kind of thing I like doing with my clients, is to kind of help themselves to be successful by profit planning, tax planning, all those kind of things to kind of help them succeed and reach their goals. So the biggest mistake I see, I'm doing taxes right now, so it's fresh in my mind. Everybody wants to write everything off because they're business, right? And that's true, you can do that. But if you don't have documentation to go with it, right, it ain't gonna fly. So one lady tried to tell me she could write off getting her nails done. No, you really can't do that because it's not a business purpose for that. I mean, looks great, looks good, yes, but it's not gonna fly, right? And if you are writing off stuff that's not eligible, right, then if you get audited by IRS, they're gonna discredit all that, right? So now you gotta pay that money back, plus penalties, stuff like that, and interest. So I'm like, why set yourself up for failure in the beginning? Let's do it right and maximize as much as we can in write-offs. So that's fine.
Thank you. Well, we'll start there then,
Okay.
Adam. So since you mentioned a couple of things, I do want to, one, how many e-commerce businesses are in the building? Okay, so a good amount of e-commerce businesses. So we might want to come back to that in a second. Maybe some do's and don'ts and things you learned around e-commerce. But before we get to that, because you mentioned about writing things off, even if the write-offs are eligible, you mentioned things about the effects of it being not eligible. But even if they are eligible, how does filing losses affect your business?
So filing losses affect your business, I say primarily in three ways, right? And it all goes back to goals of your business, what we'll talk about a little bit later. But one is getting funding, right? If you continuously showing losses year after year, no profitability, the bank is not going to fund that. Now, your tax returns is going to go along with your personal financial statements, right? They're looking for assets and they're looking for viability. If you keep showing losses on your tax returns, they're going to kind of take that more as a gospel truth over your financial statements. So that's going to kind of impact on how much you can get if they do lend you money, the interest rate, if you get funded, right? Or they might just deny you altogether because you don't have something they can see being viable in the long term. Another way is if you try and get money from the government, right? Do a government program. If you're showing continual losses on your tax returns, they don't want to deal with you either because you're not a viable business. They think you'll be going out of business sometime soon. So profit and tax is not a bad thing. It's just like how you manage the money, right, and how you structure your business, right. That kind of comes into play, right. So you can show a profit, but not a whole lot, right. Like I'm going to kind of get this later, so I'll kind of say that. Third way, if you ever want to sell your business, okay, you're growing your business, you want to one day sell it. Either it blew up, you can get a great valuation. If your tax returns are showing continual losses, it's going to affect how much you're going to be able to get for your business when you sell as well. So I'll look at those three things as like why you don't want to continue to show losses in your tax returns.
Great. I have a question then before, because I don't want you to move too fast and it go over anybody's head. Does anybody have questions about what his answer around taxes on that question about writing off losses?
I have a question.
Sure.
So in terms of like with the IRS, I heard after like you can only take like before they consider your business a hobby, you can only take like 3 or 5 years of losses. Is that correct?
Yeah, if
If you're just starting off.
you keep showing losses over time, like never showing a profit, they will consider it to be more of a hobby. Absolutely. So then the losses you have for your business, it will impact how you offset your income, right? So if your business can either be passive income or active, right? You're actively involved. If it's passive income, passive losses can only offset passive income, right? So if you don't have like a portfolio or real estate investments, whatever that's passive income, those losses are just going to sit there, right? So that's why, kind of showing some profit. Again, it doesn't have to be like $1 million profit or anything like that. It could be like $10, $1,000 for a year for profit, but you're showing something that you're a viable business. And then, starting up a business in the first 2 years, having losses is going to be expected, right? But at some point, you got to turn around and start showing some viability, some profitability.
Perfect. Any other questions before we move to Elle? Perfect. Okay, Elle, I want to jump to you to talk a little bit more about any recommendations or thoughts around aligning business budget and to meet financial goals for the business.
So here's a question I want to ask you all. How many of you all are full-time business owners? Like you don't have a 9-to-5? Okay, that's great. And raise your hand just so I can see if you still have a 9-to-5 along with your business. Okay, perfect. So it looks like we have more full-time entrepreneurs in the building. That's great. So here's the thing when it comes to your business budget and your personal budget, because this all goes along with the taxes, but your budgeting really should be at least on a month-to-month basis. If maybe it can be weekly, depending on what your business entity is like. It could be weekly, bi-weekly, monthly. I pay myself monthly through my business because it's just easier. That's what I learned through corporate. I can pay everything all at once, pay myself at once, like super easy. I don't have to be like dealing with it all the time, every week, every day, whatever. But for your business, you need a separate tracking sheet. I use a spreadsheet. A lot of people are not fans of spreadsheets. You can use an app if you want to, but I like to use spreadsheets only because they're very customizable. You can forecast, you can do all kinds of things in a spreadsheet, but ultimately what you really want to see is how much money you have coming in and how much money you have going out to run your business. So let's say for your business expenses, maybe you got a website, maybe you've got some products that you got to buy, maybe you've got coaching, something that you're investing in, whatever it is, like list out all the things that you are investing in on a month-to-month basis for your business. That will tell you how much it actually costs you to run your business on a month-to-month basis. So if all your systems and everything that you have costs, let's make it easy, $1,000. Okay, so you need to make at least $1,000 to cover all of your expenses in your business, right? We're not talking about savings, and we're not talking about taxes at this point, or even any debt that may have been accrued. We're just talking about your month-to-month expenses. Then you want to add in, okay, do I have any debt? Do I need to make payments on debt? And I need to be setting aside money for savings and for taxes. So you want to put that money aside as well. So in your spreadsheet, you have this list. And the other thing, if you don't take anything else away from tonight, take this. Separate your funds, okay? Not just business and personal, but also within your business, separate your income and your expenses. So for example, have an account where all your money, all the income is going into one account. That way there's not money coming in, money going out, because that gets super confusing really fast. So collect all the money into one account. For your expenses, you can either use another account to pay your expenses, Or I would suggest, to help build business credit, get a business credit card that $1,000, whatever it is your expenses are, is going onto that card, and then every month you're paying that card off in full. That way all your expenses are in one place, all your income is in one place. Nothing's going in and out, in and out. Does that make sense? Okay. Sorry, I hope I don't know.
You answered my next question, so I was just excited about where you were going with it, because I know in the banking world, building business credit, learning how to leverage business credit is the key to being able to have a little bit more access to capital. It seems like, do we have a question back there? Please.
Yes, absolutely. So you can do it one of two ways, depending on how many accounts you want to have. And some people like multiple accounts. I do, because I like to label them. I know exactly where everything is. But if you have even just one savings account, right? So three accounts: your income account, your expense account or credit card, and then the third one is your savings for your business and or for taxes. Preferably two savings account, one for savings, one for taxes, but you can put them both in the same account. Just ensure that on your tracking sheet, your spreadsheet, that you know this amount is for taxes, this amount is for savings for my business. Yes.
So for a fairly new entrepreneur that is raising capital on their own versus acquiring capital to kind of build the business, like I find myself doing like events or, side hustles and then pouring the money that I earn from those events into my business. Would you not recommend that? Or like how do we establish as a new business building that capital outside of like business income, if you will?
So me, I bootstrapped my business. I didn't get any loans or anything like that. So when I was in corporate, I saved because I didn't really know when I wanted to go full time. And then one day it just hit me. I was like, now's the time. So I'm out of here. But I had money set aside already, right? So if that's not the case for you, then again, this is where you really do need to know your numbers. If you're starting out, you have your business, right? You already have some things kind of established, like you've got expenses or whatever. So know what your expenses are first. And if you still have a 9-to-5, I don't remember which one you raised your hand for, but in your personal budget, which is this whole separate spreadsheet that you have now, in your personal budget, you can be setting aside a little bit of money to go into your business, right? So if it's 200, 500, whatever fits your budget, that can be going over into your business to help you start accumulating more things, going to more shows, getting more income, whatever, as your business is continuing to build. One other question. Sorry, I saw your hand. And one more thing. So these spreadsheets are going to be working together, your personal and your business. In your business budget spreadsheet, you need a line: CEO salary, my salary, boss salary, whatever you want to call it. That's what you're going to be paying yourself, not the whole thing that comes into your business. We're not transferring all of that over into the personal, okay? We're keeping some of that over in the business, but put a line in your money management plan that you pay yourself, however much that is, however much your business can afford to pay you at the time. As your business continues to grow, you'll be able to pay yourself more. Sorry, your question.
Yes, I just wanted to make sure I understand what you said. So, for the business, you have, which you suggested, 3 accounts. One is income, one is expenses and or credit card. And I had a question about that. And the third one was savings and or taxes.
Yes.
So with the second one,
Go ahead.
Now, like she makes a good point, 'cause I have my clients do the same thing, right? We kind of set up the same set of accounts, but I actually encourage my clients is to put their tax account, a tax savings account in a different bank. And the reason why I say do that is because if you keep it all in the same institution, you'll be tempted at some points to move that money into your business, and it's not for that purpose, right? Even the savings account, I have them do 2 savings accounts, one for profit and one for tax. And they're both in different banks than what they keep their operating account and income accounts in.
Very good, because I do that with my clients too. Because if you know yourself better than anybody, and if you know you're gonna hit that transfer button, you know yourself. So put it over somewhere where you can't transfer. Okay, sorry. Go ahead.
and so my question
Okay, wait. Let me make sure I understand. Ask the question one more time.
So the three accounts: expense, income, expense, and savings. That expense account, where it's expense and or credit card, would that include if a bank gives you a line of credit as well?
For like working capital.
So, okay, if there's an expense that you're paying monthly, right? So, let's say the line of credit, that if you're using that on a month-to-month basis for your expenses, then yes, that needs to be in there. I want to make sure that because I'm seeing it in my head, but I want to make sure I'm expressing it the right way to you all. So if you're envisioning like a list of your expenses, right? Say the website, your building, or whatever, maybe contractor, people that you're hiring, all of those are line items. So when you add all of that up, let's say it's the $1,000, then that means your credit card that you're using for these expenses should not exceed $1,000 balance, because you're matching the credit card with what you got listed on your expenses. So that way, when the money comes in, you know, okay, all these expenses are covered. Let me move this $1,000, make this $1,000 payment onto the credit card. So then you start over the next month. Does that make sense?
Sorry, I was so engaged. I wasn't ready with my next question, y'all. I'm sorry. I have some questions, I promise. Okay, let's jump back to you, Adam, because I feel like people are always intrigued by like how big companies are able to avoid paying taxes. So tell us a little bit of like how do those companies like Amazon, Nike, FedEx, all of those, like how do they avoid paying taxes?
All right, there are a lot of tricks they employ. Some of them you guys can definitely leverage. Some of them we can't. None of us are big enough. So I'll start with the one that's kind of out of scope for all of us. That's basically offshoring profits, right? So if you look at like Apple a couple years ago, they were in the news because they were missing this. They had like $10 billion in cash sitting in Scotland that wasn't being taxed here in the U.S. That's because they just basically set up a corporation in Scotland to get all the European business, right, and kind of kept the profits there, where the tax rate in Scotland was much lower, I think almost at zero, where they brought the money back into the U.S., they had to pay at least 21% on the taxes. So we're not there yet. So let me move back to something we can do. So tax credits, right? If you're hiring employees, right? So you're hiring vets or ex-felons or even people who are in certain designated zones or neighborhoods, basically inner city, right? You can probably get credit for hiring those people and getting them jobs, right? Another one is when you're buying equipment for your business, right? So large purchases, copiers, things like that, that's over $2,500. What usually happens in accounting is called depreciation, where you're writing off the cost of that equipment over 5 to 7 years, right? But what you can do currently with the current tax structure that's out there, if you buy some large equipment, you can write off the whole cost of that in the year you buy it, right? So it's called Section 179, and that's what a lot of companies are doing as well, right? So if I look at FedEx, they buy a lot of planes, right? They got to fly the packages here and there everywhere, so they're using that accelerated depreciation advantage, to their advantage, right, to kind of write that off and show some losses. Amazon, right, they had research and development credits. So if you're developing software or something like that, that's something you can definitely explore, right? Do a lot of development costs for your business. They had a lot of research and development credits, like for years, right? And that's why they've been like negative profit for a while, right? Then they started making money. They had all these losses from prior years. They kept rolling forward, right? So if you have losses, the good thing about that is you can carry it forward for like a few years, right, to kind of offset some of your income. So again, when you're starting up with your business, you have losses first couple of years, that's totally fine. When we do start making money, you can kind of write off some of those past losses, kind of offset your taxable income for the year you start making money, right? So those are kind of things that they're doing to kind of like get to zero taxes and no taxes, right? The biggest one they playing is offshoring cash, but depreciation and then also like taking advantage of the various tax credits out there is what they're doing. So.
Any question? Oh, got one in the back.
Yes. So yeah, the employee retention credit is a little bit different. The tax credit I'm talking about is about hiring these people, so you kind of get a tax credit for that. So what tax credits do, let me explain this. They don't give you a refund. They basically reduce your taxes down to zero if you have enough, right? So like, So it's not a loss, but you just basically bring your tax liability down to zero. Employee retention credits for those who were impacted by COVID, right, who had employees and kept them on the payroll or try to keep them around. Basically, the government is kind of rewarding you, saying thank you for that, right, by giving you employee tax credits. So and I think that's going away this year. So like after next year, that credit will be done. But if you had employees during COVID or your business was impacted by COVID and kind of try to keep your staff in place, you can't apply for that credit. So if you are in that situation, there are a lot of programs out there about that, but I can definitely talk to you about it as well, a little bit more detail about how you can kind of like apply for that. So that's how that's different. So like if you hire a vet or ex-felon or someone in the opportunity zone, as they call it, which is honestly the inner city, right? People who are below the poverty line, people like that. So like you'll get credit for hiring them for their salaries that you pay them. You get a credit for that as well. Like not 100% dollar for dollar, but you get like some of that as additional credit on your tax returns.
And what's that called? What's that tax credit called?
There's a lot of different ones, but it's like an employee credit, worker credit, employee worker credit, something like that. But
Okay. It looks like we have a couple
Yes.
other questions.
I know in real estate you depreciate the asset, but
We-
how much depreciate like percentage-wise is like?
it depends on what you purchase, right? So with real estate, there's a thing called cost segregation. So different parts of the real estate can depreciate different schedules, right? Some between 5 and 27 years, depending on what it is you're depreciating. Same thing if you buy a car for your business. If you need a car for your business, you can depreciate that over like 5 years, right? If you buy a printer or something that's a little more longer, more durable, you write off over 7 years. So it depends on what you buy. What the asset is will determine how long you write it off for. But you know, with Section 179 is you can kind of like take most of that depreciation up front, which will lower your taxable income for the year that you purchased the item. There's another question back there. Yes.
You mentioned your tax credit for research and development. What about education or like apprenticeship programs within your company?
Can you say it again? Education what?
Education or apprenticeship programs?
Can you, before you answer that, can
Yeah.
you repeat the question?
Repeat the question? Okay. So make sure I have this right. You was asking about credits for educational programs, correct?
You mentioned research and development.
Yes.
I wonder if that ties into like education or apprenticeship programs.
No, that doesn't apply for that. Research and development is more for like creating products, right? Or creating software for like, so people, like a Dow chemical company, right? They're trying to come out with a new product, so they put a lot of time into researching like, different chemicals to make this work, that works. Software companies are developing a new software, right? Things like that. So like educational program, apprenticeship programs wouldn't fall in that category. But if you have a program like that, there are some write-offs you can use for that, but it won't be a tax credit. Yes, yes, ma'am.
So you talked about the WASI tax credit, which is the work opportunity for
Yes.
those marginalized demographics. What if we're contracting work through like a WASI? We're not necessarily paying them a salary, but they may do something to help our business consistently throughout the year. Should we count that as a tax credit or like?
You could possibly get a tax credit. Like, I hate saying this, but everything depends on the situation, right? But it could possibly qualify, because if you have any expenses related to that, it could qualify for the credit. Like, it depends on the situation. So I can't give like a blanket answer for that, but I'd like give more detail about it to let you know if that will work or not. Yes, sir.
For like mobile devices and laptops, like if you purchase that for your business, is that something that's pretty much a straightforward write-off, or do you have to explain more? That it's dedicated?
Before you answer,
Okay.
because KG spoke to me in my ear, he's just trying to capture the questions via audio, so we're gonna have to repeat the
Okay.
question on the mic
I'm
before
sorry.
you answer it.
My bad. I apologize. So you asked about laptops and cell phones that you purchased for your business, right? Yeah. Okay. So when you depend on the cost of the item, right? Like again, I use like a $2,500 threshold for depreciation, right? Everything under that, I just expense it out.
Is that per device or?
Per device, right? So now if you go out and buy a bulk of like 10 computers at one time, I'll probably take that bulk if you like doing one or two, I'll probably just say just go ahead and expense that the year you buy it. If you're buying like a bulk, like say 10 computers at one time, then I'll say let's probably depreciate that, because now you have like a bigger because like you 1 or 2 computers, depending on what kind of computer you buy. If you buy like Macs, like 2 of them, you probably depreciate, right? But if you buy like a Dell, you probably just going to be under the $2,500 threshold I have. So I'll probably just write that off. Okay, that makes sense. Like for the cell phone, same thing. I'll just write that off. But the cost of the cell phone every month you should be writing off as a business expense as well, though. For the service and for the internet you use it for the computer as well.
Elle, I think we're going to pass it back to you. Would love to hear a little bit more from you about maybe like you talked about having the savings account for the business. Can you talk to us a little bit about how you budget to plan to scale over maybe a 3-year time frame, a 5-year? How do you start building that into your budget so that you're strategically saving in the way you should to scale?
So first, I'm just going to back up just a little bit.
Please.
So I'm like hearing all these questions about taxes, which is amazing, and you're doing such a great job explaining, because some of this I'm like, I didn't even know that. Thank you. But one thing that is going to be your best friend is having something like QuickBooks, or there's something called Wave, something like that. You can even get QuickBooks as an app on your phone. That way, when expenses are coming through, so let's say monthly you're looking at your budget and you see these things that are coming through your QuickBooks, right? Because you're connecting your QuickBooks to your accounts that we just talked about. It's going to pick up everything. It's going to see all the expenses, all the things. So then at one point, it'll start to automatically categorize these things. At first, you're going to have to kind of tell it, okay, this is utilities, this is apps, this is whatever, materials. You're going to tell it. But then the AI or whatever, artificial intelligence, will then start picking those things up, right? So then it makes it really easy for you come tax time, because what's so great about this technology is that it does these reports for you. So now you don't have to go back and like for the year, which is a pain in the you-know-what, to see like, okay, what came out, what came in, da-da-da. You've already got it ready, and it will print out a P&L, profit and loss, for you. So you'll be able to see exactly how much money you made and exactly how much your expenses were, and then what your profit was. Also, what it'll do is it will tell you how much is your estimated quarterly taxes, right? So that's really important. April 18th is the first payment for quarterly taxes. So you want to make sure that you're keeping up with those things, because my first year in business, I was like, I'm just going to pay it at the end of the year. They won't know. And they do. Okay, they know. And then you get hit with the penalty. But luckily, I was able to pay off everything in full, whatever. But one thing that happens with a lot of business owners is they make that mistake, and then they end up with the tax bill the next year. So now you're paying your expenses. You're also trying to save. You're also trying to pay your New Year's quarterly taxes, and you got last year's taxes that you're trying to pay. So that's a lot you're trying to make up all in one, to bring in that income. So it's best to make sure that you got your taxes in order, and make sure that that is not an extra bill going into the following year. Now, for scaling. So for scaling, I would say the best thing that you can do is forecast, right? So if you know, okay, every month I'm able to put $500 into my business savings account, what is that going to look like in a year from now? What is that going to look like 2 years from now? And from then you can start planning. Planning is the key word here. Okay, as I build up this income, then what am I going to use that money to scale? Am I going to hire more employees? Am I going to get better systems? What am I going to do to ensure that as I scale is successful? Because one thing that happens is sometimes people try to scale too quickly. They start getting all these loans and start making really bad decisions, hard money loans, all these things, credit cards sky high. And then now they're trying to figure out, now that their finances are in disarray and a mess, how do I pay off all of this? And that's where we go talk about being profitable. You don't want to have all these extra loans and extra debt out on your business if you can help it, right? Because when you go to the bank and you ask them for additional money, they're going to be like, well, what'd you do with all this other money that you were spending? Where'd all the other money go, right? So you want to put yourself in a good position to say, okay, even if your business has a little bit of debt, I'm paying it off every month. You know, the debt is decreasing. This is where my business is going. Numbers are everything in your business. And I know a lot of you are probably thinking, numbers is not my forte. I might just pay somebody to do that. But you know what? That's okay. You can pay someone to do it, but it's going to be very important that you know these numbers yourself, because we seen Enron, right? We seen all the things, the embezzlement. Even Coach Stormy, she had a financial advisor or whatever taking money from her, right? So if you're not paying attention to your numbers, it's very easy, even if you hire somebody that you think you might trust, when it comes to the green, people's minds get crazy, okay? So you want to know and understand your numbers, even if you have somebody else handling it. Okay, questions? Go ahead.
What is I know we talked about the different savings accounts, the different accounts. What is a general rule of thumb for, let's just say every $1,000 you make, you should put X amount for taxes aside
Yeah.
for every $1,000, just so that you are, even if you overshoot how much you actually had to pay, what's a good number per thousand?
All right.
Repeat the question first on the mic.
All right. So you asking like, what's a good number to put aside
Per
per
$1,000.
per $1,000? So I don't look at it that way with my clients. So what I do is, okay, have y'all ever heard of Profit First, like the book? Okay, I use that with all my clients basically, right? So we're not going off of per thousand. I'm like, you have X amount coming in, right? And you pay for materials and contractors. What do you have left? That's like your real revenue for your business. So we're gonna take a percentage of that real revenue. We're gonna put it aside for taxes, like 15%, basically, right? And then we'll put like 5%, depending where you're at, for profit, right? Then I tell them half of that goes to you, and then 30% you're gonna spend on expenses. So what that means, we got to do a lot of cost management up in here, right? So, because I mean, if you don't plan for the profit, basically, you won't have none, right? If you don't prioritize paying yourself, or even put money aside for taxes, everything else is going to take priority, right, in your expenses. So that's how I do. I use the Profit First method with my clients. I tell them put 15% of their revenue aside for taxes, right? That's not the bottom line; it's the top line, right? Okay. So what that typically does, it should pay for your business taxes, but also should cover you personally as well, right? And if you do it right, you probably have a little bit left over at the end of that. When I tell my clients to take a little bit of what's left over, pay yourself for doing a great job in managing your expenses, right? But let's start back to like building that savings up again. Like she said, every quarter we're gonna pay out the estimated portion, but we're gonna take 15% off of our revenue.
Great question. Yes.
I went from managing a business that was like e-commerce and online sales and like selling at markets, so like the income was pretty somewhat regular, but we could kind of better predict, to now where I'm contracting. So some months, I'll have projects, other months I won't. So like having that type of inconsistent income, like what are recommendations for that type of model where it's harder to predict month to month what may be coming in?
That's a really great question. Oh, okay. So how do you, when you have unpredictable income where the income is going up and down month to month, how do you prepare, like basically month to month for the dips, really, right? Okay. So let me go back to saying, when you know exactly how much you need to make per month, that's the goal. Like, even if it's just the minimum, right? So if you know, okay, I need to make $3,000 to meet all my expenses, then you know that is the bare minimum that you need to make. Now, let's say there's a month where you make $8,000, but you know $3,000 is the minimum. Then that's when you can be setting aside, instead of just a little chunk that you may put away for savings, then maybe put a bigger chunk away for savings, because now, just like with personal expenses, they say the rule of thumb is to have at least 3 to 6 months of savings, right? I say the same thing with your business, because you never know what's going to happen. We saw the pandemic. We saw all kinds of things happen, right? So, like, you never know, especially in the business world, it's unpredictable. So if you can build up to have at least maybe 3 months of savings, that way when the dips come, you're able to still stay afloat and survive. I was gonna say something else, I forgot. It'll come back to me. But yes, does that make sense though?
Yeah, but in that tax account, you're putting away 15% of that month's revenue.
Yeah. Mm-hmm. Yeah.
And then right behind you, yes, you.
Can you say the tax formula again that you said? You said 15% for taxes, and you said 5% for something.
So it's based on revenue, right? So if you're making between $0 and $250,000, right, you're gonna put 15% aside for taxes, 5% for profit, right? You're gonna pay yourself 50% generally, and then 50%, and then 30%. The remainder will be for like your operational expenses. Now it will vary depending on like industry, right? So I have some clients where we do like a 40% for operating expenses and 40% for owner's pay, basically what it's called. But generally, rule of thumb is like 50% you pay yourself and 30% you put aside for operational expenses.
And that's if you make it up to 250.
From 0 to 250, like that would be percent. If you're over over 250, it switches where you're still doing 50%, 15% for taxes regardless, all throughout, even if you're making 10 million, right? But the amount you pay yourself will reduce, and then the amount that goes in profitability will increase, right? But also the operational budget will also obviously increase as you grow your business. You need to spend more on operational, because you got to hire employees and things like that, so that budget gets bigger as you go along as well.
I'm going to add to that really quick. Back to your question, I just remember what I was going to say. When you're forecasting, so like say you've been in business for a couple of years, every business goes through seasons. Like my business, I do money coaching at the beginning of the year. I know my business is going to boom because everybody is like, new year, new me. I'm getting my finances together. Let me hire a money coach. You know what I mean? I got my taxes. Here I come. You know, that's what they do, right? But towards the end of the year, November, December, ain't nobody calling me because they buying Christmas presents. They doing all the things for the holidays. So I already know, like, when the holidays come around, I know things are probably going to slow down. So during the beginning of the year, that's when I'm, like, stacking, right? Because I know I'm going to have those slow months. So if you can kind of take a look at the ebbs and flow of your business to see maybe the summer months are booming for you, then that's the time for you to really start stacking or whatever. You know, you have to look at your numbers and see what were the higher months and what were the lower months and then prepare from there. Also, with the pay yourself first, I totally agree with that. I used to do it backwards when I first started with my business. I was like, let me make sure all these expenses is paid, you know, like I got to make sure all these things are paid. But one thing that I did learn was that, okay, if you're paying yourself first, right, and you have your numbers, even if we do the formula of the 50% and then let's say you add your expenses in and then you're over budget, well, that's when you need to start looking, okay, maybe if it's $200, $300, $500 over budget, are there some things I can cut? Do I need all of these systems and processes? Do I need all of these contractors or employees or whatever? If the dollars are not meeting every month, like if it's in the negative every month, oh, okay. If it's in the negative every month, then that means something's got to go, right? Until you're able to put those things back into the budget.
Okay, so you guys both talked a lot about knowing your numbers. And so this is kind of to both of you guys, whoever wants to start first. But you mentioned even like accessing capital through going to a bank and wanting to get a loan. So we know, you all both know how important financials are. One of the things in the banking industry we see a lot is entrepreneurs coming to access capital, and the financials aren't good enough to the standard that the bank needs to be able to lend. But the bankers aren't the ones always looking at the numbers. It's the underwriters who aren't there. So the bankers don't know how to explain why it's a no because they're not the one underwriting the document. So how can entrepreneurs work with a financial coach and or a CPA to help them position their financials in a way that they could access capital?
Okay, I'll start. So I think the first thing is if you are unfamiliar with your numbers or if it's just not your thing or your forte, I would highly recommend like just getting together with a financial coach or a financial advisor, somebody that can help you understand the numbers, even if it's just a one-time conversation, so that you can go back and start implementing what that looks like for you and your business. I would say I'm the first stop, then this man right here would be the second stop, right? Because I'm going to help you get your finances in order and organized so that when tax time does come around, when you go see this guy, he's not like, what in the world is all of this though? All these receipts or things you're just putting on my because that was me. My first year, I was sitting in the tax office for 3 hours, like, oh my gosh, what? And this next year is not gonna be like this, right? Once you go through the experience one time, that's all you need. So make sure that you're just organized and like talk to somebody, ask questions, like don't be afraid to do that. I think a lot of us are too scared to ask those questions, but it really just sets us back. It puts us in a hole, and then we get into a position where things are just too far gone, right? And then we want to ask for help. No, ask up front. Ask in the beginning. I tell my clients like let's I would rather us talk about it first and make a plan than to try to clean it up after we didn't already made some mistakes, okay? So that's what I would say.
So, is this on? Hello? Okay. All right. So the question was about, like, can you repeat the question real quick?
Sure. So how can entrepreneurs work with a CPA to
Yeah.
prepare financial documents for the bank to be able to access capital? Do they work
Okay.
with you? Do they work with the financial coach? Who
I
do
was,
they work
I would
with?
say both. Like what she's doing, definitely kind of get yourself together. I worked in banking for a while, so I've seen what they look for. So I know like your financials is going to be key because what they're going to look at is ratios, right? Debt to service ratio, right? They're going to look at how many your assets over liabilities, right? Things like that, right? Your debt to income. So having good numbers will determine like how good your ratios will be. And they're going to compare your ratios to like the industry, right? So if your e-commerce, right, and your profit margin is at 5%, but the industry is at 10, right? That's going to be, a red flag for them, right? So stuff like that. So having good numbers in place, knowing your numbers, so you can speak to them confidently is going to help. The way I come in is I do the bookkeeping and CFO services for my clients and stuff, so I can tell you like, okay, this is what we need to like focus on, right? Cash flow is going to be big for them, right? Because it's how your cash flow you'll be able to pay the debt. So your cash flow is not just your profit and loss statement. It's different. Profit and loss gives you your profit. Your cash flow is like after you pay your loans, you pay yourself, how much cash is left over in the business, right? That's where the bank account comes in, right? They look at your cash flow. How much cash flow is your business generating to like be able to afford to pay the debt for the amount you're trying to like seek a loan for? If you can't, you want a $250,000 loan, but you can't support to pay a $100,000 loan, you're not gonna get approved, right? They'll probably try to give you like $50,000 and say, if you don't want this, then too bad. So having good financials, good numbers, knowing your numbers, and then knowing the key ratios about your business and how money is flowing through your business, that's what we will help you understand. And that's what the bankers are looking for. So if you don't have that stuff in place and it's not organized, so what I see a lot of times is people come to me with their balance sheet and they have debt that's negative on their balance sheet, right? So as that lets them know, it lets me know that this is not in good shape. So if it's not in good shape, then of course you're not going to get approved for what you're looking for. You might need to get denied because you don't have good information. Accounting is different. Like I said, it's like a report card for your business. It kind of like tells the activity what you're doing. If they can't get a good read on what you have, but you won't be able to get approved. So, just not just profit, but it's your balance sheet as well. Your balance sheet is like, this is what I own, this is what I owe, and this is what I have left over, right? If I can put it in those terms. So if they can see you have a lot left over that's going to your business, then like you have a great opportunity of getting funded, for your business.
And credit. Ensuring that your credit is good, because when you when you are, especially when you're first starting out and you really don't have any business credit, they're going to look at your personal credit. And I'm telling you right now, if your personal finances are everywhere, your business finances are going to be the same. So you want to ensure that your personal credit looks good too.
So most of the time, what's going to happen is they're going to look at your business, they're going to look at you, and you might have to guarantee the loan. So if you have assets available, right, for them to kind of like put a lien on, they're going to do that, like your house, whatever. I've seen people going for like, they had $1 million in assets, asking for like a $10 million loan. They put like a lien in their house, right, to consider, because they're taking a big risk on giving you money, right? They want to make sure you get their money back. So they're going to try to over-collateralize. So they're going to look at the business has as far as assets, and look at what you have as far as assets, and then your credit. And that's going to be all kind of considering to like if they're going to approve you for a loan or not. So I would say, yeah, get your credit straight for one, because that's going to be a big consideration. especially for smaller businesses and for small dollar amounts. What you have with your credit score is going to be a big component in that.
Any questions? Sir, yep.
As far as going back to the cash flow, I know there's different loan programs and funding programs, but typically, are you turning in, as a business, are you turning in P&L, balance sheet, bank statements, and tax returns? Like, what is the bank asking?
They want to see, when you go into the bank, you're asking like what they want to see, right? So they want to see your P&L, they want to see your balance sheet, right? Because balance sheet would say what assets you have as a business. Again, they want to see what they can kind of attach a lien to, right? So your balance sheet, your P&L will definitely be two things. Your tax return is another thing because they want to see if you're cheating on your tax return, like what do you actually have, right? They could think you'd be more honest on your taxes than you are with your business. They could think you're overinflate your revenue and income to kind of get a loan. Look at your taxes to see where the truth is in there, somewhere in between, right? That's what we're going to look at your tax returns. Then we're going to look at your personal financial statements, right? So your bank statements will basically will be part of that as well. They're going to see that. So like all that financial information you have, like having your stuff together, a personal financial statement, a personal balance sheet would be great because they want to see what your net worth is. They want to see the net worth of the business, so that's where your balance sheet comes in. And then the tax statements for your business and for you personally, they want to see that as well to kind of make sure, like, kind of figure out where their true north is for your business and for you personally. So, okay, let me repeat your question. What will be an asset for a service-based business? Cash is going to be basically your biggest asset that you have, right? So that's where profit management comes into play. For you say intellectual property. If you have a patent, yeah, like if you have a patent or something like that on your app, right? Or trademark, copyright, yeah, so something that's like that nobody can take it is basically yours. Yeah, like that will be something they can use as potential collateral because if it won't probably carry as much if it's not, have a patent. Like a patent probably carry more weight, right? But that would definitely kind of count towards like assets that they can kind of like look at, see what kind of value that you have on your intellectual property to kind of like use that for funding as well. I wouldn't say you might not get as much as you would think, but it was something they might probably consider as well.
And I would say from the banking industry, different banks have appetites for different types of businesses. So you really have to shop around. I know we're talking about this in a very blanket way, but every bank has a different appetite for different types of businesses. So you want to figure out what bank has what appetite for what. And then it's so incredibly important to have a relationship with a banker, more than just like you knowing their name or you just making deposits with them. A good banker is going to give you access to other resources. They're going to give you strategy. They're going to give you recommendations to CPAs. They're going to sit you down with an underwriter and help you with your financials. They're going to walk you through the process kind of step by step. Sometimes you just have to shop around to figure out who understands your business and who really has a heart to kind of walk with you along the way. But a good banker is so pivotal and critical to your business. A lot of people that got PPP right away, yes, their financials were together, but they also had their banker on speed dial and they had their CPA on speed dial, and those people got helped first.
Absolutely. So your question is your personal tax the file number you're looking at?
No, your
Business?
Yeah.
Okay. So your tax return is going to determine, right, if you're like an LLC, right, then your business income will be on the schedule with your personal return, right? So they're going to look at your personal return and then also what the business is doing, how it's contributing to your personal taxes, okay? If you have like an S Corp, C Corp, something like that has to file its own separate return, then they're going to kind of like look at that on its own. Now, again, the tax return is kind of looking in conjunction with your financial statements, right? Because people rely on the financial statements, but they're going to try to like, gets close to the truth, if not all the, not all the way. Nobody will be totally honest in their taxes. I come to find out, but like they're going to be, they're not going to overinflate their sales on their tax return, right? So they're going to kind of feel like that's probably the more truer sales number for this business than their financial statements. That makes sense. But I want to also make clear that profit and cash flow are two different things. Okay, so profit is what you have in your P&L. Cash flow is basically what flows up to your bank account at the end of the month. You know what I'm saying? So like when you have like a loan for your business, right? The interest for your loan goes on your P&L, but the loan payment itself goes on your balance sheet, right? You're gonna pay both of those every month, right? So you can't look at your P&L and say, this is my cash flow for the month. It's like after you pay all your necessary operating expenses, now you gotta pay your loan, you gotta pay yourself, right? How much cash I have left over? That's where your cash flow is. How much cash does this business generate for me, or for the business itself at the end of the month after I paid everybody, including myself? Does that make sense? So think of cash flow more that way, not your net income on your P&L. Yes, ma'am.
So another person had posed a very good question about leveraging the surplus during those fluctuation months where you may not be as busy. I wanted to kind of just see when we do have surplus in our business like that. One of the things that I found very interesting in the materials was stocks and bonds.
Yes.
And I may be going over the scope of what today's panelist is talking about, but how do we leverage that surplus to invest in our business through stocks and bonds? And how do we kind of like report that tax-wise or?
Okay, so I'm gonna let you talk about this too. Let me read it real quick. All right, so I look at it this way. Like we have.
Question. You have to repeat the question.
Oh yeah. Sorry. Yeah, I was gonna jump right in. Okay, so your question was like, what do we do with the excess we have, right? Do we invest it into stocks and bonds and things of that nature? Okay, I would say a portion of it, yes. I would definitely invest, right? Not all of it, but it also depends on your goals for your business, like where you want to go, where you want to be, and your horizon, your timeline. So that will kind of determine how much you want to invest in like stocks and bonds. 'Cause I think you should try to get the most return out of your profit that you can, right? You don't want just sitting there in a savings account. But again, when I say that, I don't want to put all my money into the stock market because I might need something for a need 2, 3, 4, 5, 6 months down the line, right? And the fluctuation in the market could basically right now or sometime soon could reduce the amount that I get back, right? So I might have some losses there. So I want to kind of keep some in the savings account in cash. I want to have some of it invested, right? But I don't want to put everything I have in investments. You got to kind of like, think that through, like what you want to do and how often you're going to need some money.
So out of the 15, 5, 30, and 50, which
So out of that 5%, you're going to take a portion of that and you'll invest it. So like what I do with my clients, I tell them with the 5%, what we're going to do is every quarter, like if, since it's in a separate bank account, right? We're not touching use it for business at all. Every quarter, you're going to take a portion of that 5%, you're going to pay yourself as a dividend, right? And then you're going to leave the rest of it in the bank account, right? So every quarter, when we build it up, every quarter we're going to pay ourselves a little dividend, leave the rest in there, right? Because you might have some future need for your business, right? Like for investment in growth or something like that, and some new products. But it's not for operational expenses at all, right? It's for like either for yourself or, some of my clients use it like that 5% to help them pay down debt, right? So every quarter they pay like a huge chunk of their debt, right? Paying it down because they want to pay off like a student loan or something like that, right? So they kind of use it for that piece. But that's what that 5% is for. A portion of it you invest, a portion of it you save, leave in that savings account.
I would really quickly before you ask your question, I would add to that. Just like on the personal side, business and personal is similar, but not. But there are a lot of similarities. But just like on the personal side, I would say don't start investing until you have at least that 3 to 6 month cushion, because just like on the personal side, investing really is a long-term game. That's what you want it to be. So if you don't have any cushion, if you don't have any savings, the first thing you're going to dip into is those investments. So it's better to have that cushion there. And then once you get that cushion, then the overage from there can start being invested slowly, I would say, because it's just so unpredictable. You just never know. You just never know. Oh, go ahead. Who had the question? Okay, go ahead.
Yeah, like the conversation in the room kind of sparked two questions. So my first question is, when you get to the point where you have your savings, right, your cushion, you have business profits that you want to invest
banker. You want to take that one?
I'm in community development.
Again, we have investments. It's going to be a business balance sheet, right? So it is assets, right? So if you have assets on your balance, having assets is a good thing, right? So investments will be an asset on your balance sheet. So it's a positive. It actually shows like prudent management of your funds because you're not just having it all sitting there, right, in one spot. So again, thank you for saying what you said because I forgot about that. Have the cushion first before you invest, but the investing, like, that should definitely be part of your plan for your profits. Once you have that 3 to 6 months worth of expenses set aside, put a portion of that to investing, but that won't be a negative impact. It actually looks like good money management on your part as a business owner by doing that.
My other question was, you were talking about personal credit. So if you have a really strong personal, like, financial profile, right? You want to be able to leverage that to support your business. But how do you do that still while protecting assets? Like, if I use my property as collateral, does that mean if the business fails, then I'm, like, me personally impacted?
So you're asking if you have great credit, you use your personal assets as collateral for your business, and your business fail, will they take that? Yes. So that's why I would say don't. That's why I say, like, if you're going to get a loan, make sure it's not something too big where that needs to come into play, right? Because, like, if you're going for a bigger loan, you got to put in more assets, right? Basically, right? So, like, if you need a loan, you're going to look at how much can your business support, for one, right, before you go ask for a loan. But then look at what assets your business is generating, and then ask yourself, what business am I willing to lose, right? If you're not willing to lose your house, then don't go ask for a big loan from the bank. And honestly, you should not put your residence for collateral at all. Like, I don't like that idea personally because you need a place to live, right? So, like, keep your house by all means if you can, like, outside of that. But other assets you might have, I don't know, a CD or something, they want to take that as collateral, you're like, all right, cool, but, like, don't do like a big enough loan to where you had to put your house up, is what I'm saying. Like, maybe you need to scale back on expenses, like Elle was saying earlier, to kind of help your business generate more cash flow, to kind of help fund your business a little bit better, versus doing something like that. But they will take your house if your business fails, and, like, your loan's not paid off, they'll come after all your personal assets that you pledged. Yes.
And those are great questions. We do have in other sessions, we will have lenders here, we will have private bankers here, we will have underwriters here that can answer some of those questions. So save them for other panels because they'll be here later in the series. You did good. You did good. Any other questions? Yes, sir.
If you're planning on, I'm planning on purchasing a home in the near future. Are there any considerations to make with regards to business taxes, or is it just that person? Is that 100% a personal thing? Like, does that impact your? Because I don't operate a brick and mortar, 100% service online. So are there any implications if you're aware of that?
Are you full-time in your business?
No, I have a 9 to 5 and contract.
Okay, that's great.
Repeat the question.
To repeat the question, gosh, I can't remember the question
Well,
because
that was
I like
actually
go in.
my next question on the sheet. So
Okay. So the question was, if you're trying to purchase a home, what are the impacts for your business, or how does your business impact that? Is that what you're asking? So a couple of things. It's good that you still have your 9 to 5 because when you go to apply for a home loan, that's where they're going to be looking at your W-2s. They're going to be looking at your taxes. The difference is when you're full-time in your business, if you don't have a home already, what they're going to do is they're going to look at not your gross revenue, so meaning all the money that comes before you pay your expenses. They're going to look at all the money you have left over after your expenses, so your profit. So let's say if you're making $100,000 a year, but you're only profiting $20,000 a year, they're going to look at that $20,000. That's what they're looking at, not the $100,000. So if you want to put yourself in a position, if you are full-time in your business, you want to ensure that you have enough of a profit that's shown on your P&L, balance sheet, whatever, so that when they look at this, they're saying, okay, the profit that he or she is bringing in is enough to cover this home loan. But it's good. Do it now while you still got your 9 to 5. That's what I'm saying. That's what I'm trying to say. Like, yes, yes.
And I don't know if you might want to add on to this too, Adam. The next question was, if you're looking to make a major purchase via loan, what should your tax strategy be as far as buying a business, getting a business loan, house, car, building?
Tax strategy for getting a loan. What I would say is basically to kind of get a better rate and a better, more funding is kind of have good financial statements would be like number one. Like a good balance sheet, a good profit and loss statement, everything in the right category, right? So when I get a lot of clients come in, they have like expenses and where the revenue should go, and the revenue and expense area, like it's a hot mess, right? If your financial's not in shape, you won't get it. But I would say, as far as the tax strategy, just having good, number one, just having good books. Having good books is going to be key to getting financing for that. Now, if you want to like if you're going to like get a loan for something that's going to like provide more revenue, you probably have a greater chance of getting more favorable terms. They can say like you're going to buy, if you have a detailing business, you need to buy a truck, and it's going to help you go out and get more business. It's going to be a revenue generating loan for asset, whatever that. You probably get something out of that because now you're buying an asset that's going to be secured by the bank, right? You're going to have the first lien on that. So if something don't work out, they're going to take the truck back, right? Something like that's like asset base is probably going to be a better strategy to go for, right? Along with your good financials. Even buying the business, right? Buying the business is one that they can see the business is generating some cash flow that can cover you, pay you, and cover the loan. They have an asset, again, that they're lending against that, be more favorable for them to kind of do that transaction than say like just funding working capital when you don't have enough profit, in your day-to-day operations. That's going to be a little bit harder. So good financials is going to be like the first key there.
No, I think he covered it.
Okay. Well, to go back to the e-commerce businesses, do you have any kind of do's and don'ts that you learned or would recommend when it comes to e-commerce businesses?
E-commerce is first is because I know like when you're sourcing products from overseas, whatever, right? There's 4 things that kind of like go into profit, right? Revenue is obviously one. Right, but then how much are you paying for the material that you're selling online, right? Are you getting the best price from the right supplier? Are you getting a good quality product? And then 2, like what's the average order value? Okay, so I'll get the average transaction value. The better that is, like, obviously, the higher the profit potential is going to be, right? So if someone has an average order value of 500 versus someone has 750, obviously going to be in a better position to have a higher profit. So, but like going through this whole process of being in e-commerce, I just realized how important profit first is, because you get caught up in trying to like get this app to do this and this app to do that, and you hire a consultant to do this, to that, and the other. At the end of the day, like I still made money, but I could have made more if I would have been like thinking more profit first and kind of playing for a profit perspective, than just trying to like get all these apps so I can make it more of a passive business, right? You want to get to the point where your business is making enough money to pay yourself, right? But also kind of support the team you have. But like doing it in the right way where you're kind of prioritizing your tax liability that you're going to have to pay, right? Make sure your business is going to be profitable. I had investors, right? So I raised like something like $100,000 for the business I purchased, right? So I had to pay them back, right? They want to return their money. So like this kind of taught me how to do the profit planning stuff that Elle's talking about. I had to implement that pretty quickly in my business. But I had to like, but that's why I kind of got like more into, I like the number side better, right? I like, paying them out, kind of see how much money we made. I cut expenses, increase profit. That kind of like made me more excited than like how many pieces of hair I sold last month, right? So that's why I kind of like moved into like just doing more accounting because I enjoy finance more, more than I did that. Now, will I do e-commerce again? I probably would, I probably will. But because I like it, and I know it's like the way things are going because people buy more on their phones now, right, than they do walk into a store. So, but with that, like profit planning has to be key. Because like if you don't know your true cost, right, you can't price right, and your pricing strategy is going to be key to being successful in this business, in e-commerce business.
Any questions? What's our time looking like?
You have a question?
Did you say you have multiple businesses or you just have
I have two right now. I have invested in a trucking company down in Houston, and then I have my bookkeeping and tax business and consulting business as well. So I did have e-commerce back, a few years ago. I kind of let that go, but I probably will get back into it again because I just like analysis and numbers. So.
My question, kind of confused about is the cash flow, because right now I own a beauty spa, but I want to open a second location. So I was wondering, should you keep, since it's the same thing, should you keep everything, like pay the bills in one account and have the income come to one account, or have like a bank account for each location even though it's the same thing?
You want to take that one? I have a lot of thoughts on that, but for everybody.
Personally, I say it would depend on what makes most sense for you, the way you want to organize it. However, I would say if it were me, I would put everything in all the income into one account, but have all the expenses listed out. So if you have two buildings that you're paying for, you want to put both the rents in there, both the utilities, like all listing out all of your expenses. That would be my way, since you just have two locations, because it can start to get a little cumbersome if you're like, okay, this accounts for this accounts for this. You want to just try to make it as simple as possible for yourself. So if you can have all the income go into one account and then still have your list of expenses for both places, then you'll be able to still, keep up with what's coming in and what's going out as easily as possible. That would be my suggestion.
I'm gonna piggyback off of that. So I like that idea, but I definitely what you should do also is kind of separate out, like, salon 1, salon 2, right? So you want to know like how much is this store making versus this store, what are the expenses for each, and kind of know the numbers between the two. So you kind of figure out what's working at one store, you can probably implement another, or what's not working, so you can figure out what to switch up, right? So if you have the same accounts, that's where accounting software comes in, like QuickBooks or even Wave, which is like free, right? QuickBooks is like $55 a month or something like that. So if you don't need to pay $55, Wave is the way to go. I tell a lot of my clients who are a lot smaller to use Wave. But like separate out for location, right? So so even though it's all going in one account, you kind of have separate books for each side. So you kind of figure out so you can manage that better. Because if you don't know your numbers, you can't manage it, right? So.
Wave, WAVE, and QuickBooks. If you do the self-employed one, it's only like $16. But you can still use Wave for free though. It does the same thing. Go ahead.
You say you use QuickBooks and you have an Excel spreadsheet?
Yes. The QuickBooks I use to capture all of my numbers, so I know, at the end of the year or even month to month, how much I've made so far for the year, how much my profit is so far for the year. Also, it does do the calculations for your quarterly estimated payments. So that way you can also be planning in your spreadsheet, okay, I need to make sure by April 18th or whenever, that's the first deadline, I have this amount. QuickBooks is telling me I owe however much, $1,000, whatever. I need to make sure that I have the $1,000 set aside to pay my quarterly taxes by April 18th.
Is there any feature that is different on the two? Because I don't know, I'm just always like, it must be something else included.
On which QuickBooks or Wave?
Yeah, like, or do they do the same thing?
So I personally haven't used Wave, but I've heard about it a lot from a lot of different business owners, and they say that it's very, very similar to QuickBooks. So yes, it does do the reporting. Mm-hmm.
QuickBooks has like a lot of additional features that, honestly, you can do it off a spreadsheet. But like it has like a cash flow planning tool. You can track your mileage with it. But both of them, you can well, Wave has an app. So if you go have a meal with a client or whatever, you can pull up the app and take a picture of the receipt and save that, which would be great if you're having meals. Keep the receipts. But QuickBooks has that. Wave has it as well. So like if you get like really technical, right? You have like 5 or 6 stores, right? Then I'll say move to QuickBooks, right? If you just have like one business and you just want to kind of keep track of your cash flow, your balance sheet, and all that kind of stuff, then Wave is great because it's free. And then like she said, like the AI will start recognizing transactions in both, and start kind of like posting things for you automatically. It's very easy, right? I just had a client on there, set her up. I mean, it's very she's picking it up pretty quickly, right? So like Wave is a lot easier to use than QuickBooks. Yes, sir.
So like PayPal, with
I would say when you look at a bank, you need to look at what features it has, what it offers, right, for what you need for your business, right? Like I tell some, like in some places, like I don't like Bank of America. I'm just be straight up honest with you guys. If a client has Bank of America, I'm like, you need to move to another bank. All right, because they charge you for everything, right? And then like for my clients, I like to get, I tell them give me read-only access to their accounts so I can pull their statements and do their books, right? But Bank of America wants to charge me like $15 a month for my clients for me to have the access, right? If I go to Chase or some other bank, it's free, right? So I'm like, they try nickel and dime me to death. But anyway, I'm sorry, I got off on a tangent. No, so like if you're having a business, right, like features like Zelle, right, and ACH and wires are going to be very important to what you do. So you want to kind of look, see if you have those features available, right? But also like, you know, if you're getting paid interest rate on your balance, right, it might be something you want to consider as well. Like there's some banks or different accounts you can have for that. And depending on where you are in your business evolution, right, you want to see who has like low to no fees for the account on a monthly basis, right? So for that reason, I'll say if you're starting out, like don't use Chase because they'll charge you $15 a month for that. So you're paying, you know, what, over $1,500, well, $200 a year just to have an account with them, right, that you're not getting any benefit out of. So like, I like, just like look around for different accounts, but like for PayPal and all that kind of stuff, like it's great. The debit card, I think you go to bank and have like a relationship with a person that you can go and see at a bank is gonna be more beneficial to you than say like having a debit card from PayPal. Because you have a bank relationship, we need to go get a loan, they know who you are, they understand your business. You have a lot better chance to go to underwriting, right? Because you have that relationship with them. They tell you what they're looking for, tell what you need to bring, and get a better chance. So I'll say go to like a bank first, right, before you try like these online options.
Is there a good way, is there a good way of like minimizing the cost of transferring money? Like let's say you're selling in person and you're using Square for your payment processing. To transfer that out into the bank, they're going to charge you a fee.
Yeah, everybody does that.
So any recommendations to like avoid those fees or lessen those fees, or is that something that you know, at the end of the year you're basically expensing it and
So,
reducing your taxes?
so your question is about the transaction fees, right? Everybody's going to charge you transaction fees because that's how they make money, right? PayPal, Square, whatever, they're all going to charge you a different percentage rate. So I would say look at the difference between them, right? Like QuickBooks might charge you 3%, 3%. Square might be like 2.5%, right? Kind of look at who has a better fee. Because they're going to charge you something to do a transfer over. So like look at the fees and kind of like make a decision from there. Then how soon can you get your money, right? So those are two things I look at for those payment processing services.
But you should get that money into your business accounts, not let them sit in Square.
So I'm going to add a couple of things to both of the questions. So when you were asking about the debit cards for PayPal, yes, 100%. Like just keep your bank debit. And a lot of the times, yes, if you're making under a certain amount, like if you're getting under a certain amount into your account, they will charge you a fee, maybe like $16, something around, depending on the bank, right? But if you're making, typically it's like over $5,000, I think, for most banks. If you're bringing in about $5,000 in income, then the fee is typically waived. So yeah, I would not really do the PayPal debit. If people want to pay you through PayPal, that's fine, but then that money goes right into your business account, right? Or if they want to pay you through Zelle, business bank account, or Cash App, business bank account, all of it is transferred there. And the question about the transaction fees, that was the first question I asked when I was starting business. I was like, how can I get around these transaction fees? I want all my money, right? But but that's the cost of doing business, yes. And at the end of the year, you can write those fees off on your taxes. So also, when you have a flow with your money management process, a lot of times they'll charge you more of a fee if you're trying to like instant access it, right? So if you have a routine, so monthly, 2 weeks, however you're doing your budget, then you know, okay, maybe I don't need to instant access this. I can just let it do its thing over the standard 3 to 5 days or whatever, because I'm going to do my budget at the end of the month, and I know by that time it's already going to be in my account. That way you're not so making hasty decisions to try to move the money over real quick because you need it to pay for something, right?
We've got one more question.
Thank y'all, 'cause y'all get my whole
Yes, please do.
But I do have a simple question about co-mingling. That was something that I really had to stray away from. But even like in some seasons of my business, my husband may give me 400 to invest in some because it's just a wash. I just want to make sure, like when I'm doing that, even like QuickBooks or something, categorize it as just journal investment, or it's literally just that simple, right?
So he's putting the money into your business account. Is that how that's happening, or you're moving into your business account? Okay, that's fine. So then you can really categorize it as like income, and yeah, if that's the line. If you're putting it in there, then it'll be categorized as income. Yeah.
I would say if your husband's give you money for your business, kind of as like an owner investment versus income, so you don't have to pay tax. That way it won't be taxable, right?
That's why he's
Like if you're investing money in your business, it's not sales, it's an owner investment, right? So that's not taxable income that way. You want like sales to be for like when you're actually providing a service or a product, you get payment for that. That's going to be your sales. You're going to be that leads your profit net.
So what is it called? Owner's what?
Owner investment.
Owner investment. Is that on QuickBooks?
It is on QuickBooks. It's a category on QuickBooks and on Wave. It's a category called owner investment. So actually, you're adding equity to your business by adding money to your business, right? So anytime you or your spouse are putting more money in your business, it's not sales. It's always an equity, like an owner investment to your business.
Does that also count for money that you have from profits that you put back into your business?
No, money from profits is taxable because your net profit is what's taxable, right? So tax strategies kind of help minimize, right, the net profit, if you will, right, legally, and then also getting any tax credits you can to kind of help bring that number as close down to zero as possible. Yes, ma'am.
Is there any way to categorize like pitch contest earnings to be non-taxable?
Pitch contest earnings to be non-taxable.
Like if you get a
Oh, like if I get like a grant.
yeah.
No, because I did a pitch contest. It was early on when we were starting up, and they asked me for a 1099.
Right.
And the 1099 was in my name because it was as a startup.
Right.
So when they sent the money, it's like
That's gonna be taxable.
$25,000 per month.
Yeah. So a grant is going to be taxable because it's like income coming to your business, right? If you get a 1099, that's going to be indication number one is going to be taxable. Okay, so definitely want to set aside some of that money for your taxes. Yes, ma'am.
I know you said the profits are, but that also includes the money we pay ourselves as a salary?
Okay, so let me ask.
That's what I was trying to.
Okay, so the money you pay yourself as a salary, two flavors, right? If you're paying yourself as a W-2 employee, right, then it's going to be it's going to come out of your operating expenses, which is going to reduce your net income, right? If you're paying yourself out of the net income, now it's like an owner's draw. So that net income is going to be taxable. So that part you pay yourself. So let me back up. If you're an LLC, right? The whole net income. So say you make $50,000 this year, right, in your business net income. That whole net income of $50,000 is going to be taxable to you on your personal return as your tax rate, right? So if you take $20,000 out of that $50,000 to pay yourself or the whole 50, you're going to be taxed on the whole 50 as an LLC, right? If you're an S corp or C corp, you're paying yourself a W-2, right? Then that's going to come out of your net income for your business. So that part has already been taken care of, right? And then also on your W-2, you're going to get the FICA and all that kind of stuff that we all know and love. So you got to worry about that part, right? So that's how it's going to play out. So if you're paying yourself a W-2, it's going to be one way. If you're an LLC, it's going to be taxed, the net income, no matter how much you take out or leave in, it's going to be taxed the same regardless.
But if you put some of your personal money back into the business, is that still an owner contribution or that don't?
If you take some of your personal funds and put it back in the business, then that's owner investment.
Can I wrap it up?
All right.
Well, KG gave me the cue that we got to wrap it up. But we've had some phenomenal questions. I do just want to give, I guess, each one of us an opportunity to, you gave a lot of nuggets, but maybe each person give one last nugget about maybe just something, a takeaway.
Know your numbers. That's literally, that's it. Like, I think that sums everything up. Know what's coming in, know what's going out, keep track of it. ask questions. If you don't know, get with someone who's an expert and get a better understanding of it. That would be my takeaway.
My takeaway is two things. Have a profit plan and a tax plan. So one, you're in business to make money, right? So you got to definitely plan for that, because if you don't, you won't make any money. And two, a tax plan will help you keep more of the money you make, right? So a good tax plan. So like, how many of y'all have kids? Like under the age of 22? Okay. Actually, so yeah, no, your kids under the age of 22. Over 7, under 22. How many of y'all kids in that category, right? So you can actually employ your kids, and that'd be a tax deduction, right? So, if they're younger, you can use it to kind of help them save for college, or give them some money to walk around with, right? But different ways you can do that, but you can pay your kids and it'd be tax deductible for you, right? So like a good tax plan will kind of help you like see all the opportunities you have and what you can leverage to kind of help you, reduce the amount of net income you're making, so what reduce your taxable income. Yes, ma'am.
If you pay your kid, if you put your kid on salary or whatever, are you responsible for paying employment taxes?
It depends. So if you have if you're an S corp or LLC, S corp or C corp, you have to put them on a W-2, right? But what you would do is you would not pay them over $12,500, so they won't have to pay any like FICA taxes. They'll have to pay Social Security and Medicare, yes, but they won't have to pay any additional taxes. That'll be it. If you're an LLC, you can just pay pay them, and then you don't have to worry about all that. So as long as you pay them up under the limit for the standard deduction for like an individual, that money will be tax free for them, and it'll be a deduction for you.
So is it best to set it up as like an ACH or direct deposit, or
You can do it.
company checks?
Yeah, you won't pay money to the company. Yeah.
And then a nugget from myself about the banking world. I know you mentioned, Elle, about knowing your numbers. When you come into a bank and you start building your relationship with your banker, lead with the numbers. Bankers talk a totally different language. So numbers will be your best friend when going into the bank. Also ask them about if they have any programs for small business owners. Because oftentimes banks, especially Frost, we have programs that are for small business owners, but we don't advertise them online. They're recommendation only. So we normally will go to our bankers and see what clients they have that they think will be a good fit for the program, or we'll partner with like COSIGN magazine and ask them to make recommendations to us on business owners who have been in business for at least 2 years that are within a certain qualification to be a part of those programs. And those programs then have additional benefits, additional resources. And one other thing that you can also ask your banker as you're having a relationship with them is if there's things that you're interested in, philanthropic things, if there's other business industries that you're interested in, a good banker will partner a smaller business with one of our larger clients that are in that same industry to provide a mentor for you. Or we're always going to charity events and getting tables at different events. A lot of times we'll bring clients with us so that they have opportunities to meet some of the people in those spaces that they might not meet otherwise. So a relationship with your banker is so much bigger than just what happens in a retail location. There's so many other opportunities that you should really explore and ask them about, because if you have a good relationship with them, they'll put you on. I think that's it.
I have a quick thing. That relationship with the banker. Now, I don't want to get on their nerves. It's just like a month of checking in.
It
Like, no money this month. You got anything coming up? Like, it's truly just.
It depends on your banker. But yes, I would say that I definitely have seen many of bankers in the industry that have gone above and beyond to introduce certain clients just because they knew them. And it could be a small business that might not be generating a lot of revenue for the bank. It's not just based off of that. It's really based off of relationship. And if they believe in you, they'll advocate for you. So I think just finding the right person that believes in you and you believe in them. And then, yeah, just like any other kind of friendship or relationship, check in. Yes?
Social media platforms that we can follow and get information from you guys?
Yes, you can. I'm on Instagram. I'm all over the place, but I'm on Instagram. You can follow me at G as in girl, F as in friend, budget, all one word, GF budget. You can also visit my website, girlfriendsbudget.com, girlfriends with an S, budget altogether.com. Has all my socials on there. You can sign up for my newsletter. I send out tips all the time. So let's connect.
Yeah, social media has been a challenge for me, but yeah, I'm an introvert in the truest sense. But anyway, I do have a LinkedIn page, but I have business cards, so we could talk about that. But my website is Supporting Strategies. I'm based out of Waxahachie, so there's Waxahachie location for the franchise. I also have another website is newwayfinancial.com, NEWAY financial.com. You can see me there as well. So do that, but if y'all want to talk, I'll give you guys a card after this, and we can kind of definitely connect after this.
Oh, mine. Oh, sorry. I'm in the banking world, so we are still very big on business cards and emails. So I'm Tristan.Wilson@frostbank.com. And on Instagram, I'm at Tristan Page, Paige.
Yeah, so a couple things. I'll send a recap email with their information, their websites, and their links so you can follow up with them. 2, please don't go anywhere. I need a picture of y'all together. And if y'all want to stay for a group picture, please stay.